Guys, what's going on? My name is Ryan. I like to trade ETFs, and I make videos on the technical analysis that I'm seeing here in the charts. Today we're going to be looking at SOXL, which is the 3 times bull semiconductor shares, and we are on the daily time scale. And just to start off, let's take a look at the Elliott wave. I see our breakout being right above this black line right here, and so this would be our first wave up, 1, 2, long third wave up here to $81, 3, retracement to 4, and then we came into our topping pattern right here, and I had a nice call right here called irrational exuberance, and it was basically, of course it had this extreme run upwards, but that's why it was titled irrational exuberance. Anyways, as far as the channel goes, the trend that the price has been within is ever since mid-2016, we've been moving higher and bouncing in these channels very well. The reason that it was irrational exuberance for me is that we were in this extremely bullish channel already. This is a beautiful channel to be within, and then we decided we needed more. We decided to break this channel, break out of it for the first time in about a year, and then continue to move up even higher after that. And then we decided we didn't like this even more elevated channel, and we decided to break above this channel, and we can see that this was the absolute high that we saw. Since then, we've fallen about 25% from the highs of about 115 down to, I think it was $80. Congratulations to anyone who has been following me over the last several months on our trading of SOXL. We can see that once we broke down, we fell down to the low of this channel, we had a bear flag, and then we came down to our ultimate low back at the bottom of this previous longer term channel, and we caught a nice bounce here at the bottom. Let's go to the 2-hour chart. So here we are in the 1-hour chart, and as far as an Elliott wave perspective goes, we have a 1, 2, 3, 4, 5, and then with Elliott wave you should have an ABC retracement. We see that we have an A, B, and C right here. This is perfect. On our way up we had this wedge, and then we had our overthrow pattern right here before our breakdown. We came into another wedge, and you can see that we broke out of that with some conviction here. Obviously would have been a very nice trade to take down here in the upper 70s to low 80s. As far as what these lines over here are, these are Fibonacci lines. We can see that we had a confluence Fibonacci right here where our 61.8 and our 50 align very closely. We can see that the power of confluence resistance and supports here, as price has struggled around this level or spent the most time consolidating. All other parts of the chart are spent in basically a straight line upwards except for this level right here where it bounces in between. That's because there's a double support or double resistance here. I call that a confluence support resistance. As far as our indicators go, I don't think that this bullish run up will last. I tend to see a more bearish picture than the majority, but I also saw a more bearish picture than the majority at this 113 level. I would be very careful entering a position in semiconductors at this point. You miss the boat if you're thinking about entering a trade at this point. So as far as our indicators go, like I was saying, we have a bearish divergence starting here with 3 consecutive lower highs, while price makes 3 consecutive higher highs. So that's the start of a bear divergence. Over here in our CCI, our volume indicator, we basically have a double top right here, and that means that there's an equal amount of volume coming in, which means that price should remain flat and not continue to move upwards because there's not additional buyers. So what that means is that the buyers that bought lower are holding, and there are new buyers coming into it. So I guess from that point of view, it could be bullish. However, the people that bought down here are thinking about taking this nice, 10% gain and just getting out of the position, and they will at some point. One last divergence to note here is this hidden bullish divergence. If you've been watching any of my videos, hidden bullish divergence is usually the last leg upwards before a reversal, and we definitely see that here as our indicator cools off. We make this low here, then we make this lower low in the indicator, while price makes this low and this higher low. This is a hidden bullish divergence, and it's giving the price action enough steam for a last push higher. So here we are on the 30-minute chart. We can see right here this head and shoulders, and we'll get a little bit more into that on the 15-minute, but this is our left shoulder, our head, and our right shoulder. We had a nice trade identifying this pennant / bull flag or bear flag right here. We come up, set our first area of support, come up, set our first area of resistance. This is A, B, C, D, and then E, and then we continue to move on downwards. The measured move here would be this blue dotted line from the top here down to the low down here, and we drag this to the point of breakdown, and it gave us this technical target of about 80.50, and that was my target 2 for the pennant. My target 1 was about right here, and we will review my past trades towards the end of this video. As far as the head and shoulders go, the technical target for the head and shoulders is marked by this orange dotted line right here, and I'm still waiting for the ultimate move for that to play out. So the orange dotted line right here comes from this high down to this low, and then we drag it to the point of breakdown of the neckline. And we'll get into that more on the 15-minute chart where I have the neckline drawn in. So my target 3 for the head and shoulders came all the way down here to the $70 range, which is also the last area of consolidation for SOXL. Not saying that it will still reach this level. In fact, I'm fairly skeptical it will reach this level. I'm just going over previous predictions. So I had 2 predictions. I said, if we have the gas from this pennant, and this pennant was the true play, and this is our ABC, this is our first target, and if this is a true breakdown, a true reversal of the technology sector, the semiconductor sector, we should see a technical target down here at about 70. So let's go to the 15-minute and take a look at that neckline as well as some previous predictions. So our neckline right here is in with this red line right here. Let's go ahead and just extend that out to the right because prices continue to move on upwards. So our neckline, which we broke, was from this low right here to this low over here. And we can see that as soon as we broke below this point, we tumbled all the way down. On the 15-minute, looks like I had an inverse head and shoulder play out here. We had our left shoulder, our head marking our ultimate low, and then our right shoulder. And since we broke out above that, for example, this would be the neckline for that. Yeah, that looks like it would be a more appropriate neckline than anything. So once we had this move with conviction up above this neckline level, it was confirmed that this was an inverse head and shoulders right here. If you wanted to be more of a conservative trader, but you still saw this neckline right here, you would have waited for the price action to break out above this long-term black line downwards. You would have waited for this point, and you also would have drawn your neckline up a little bit, and that also comes across very nicely, and we can see that it was a confirmed breakout at this level, and we've continued to move up ever since then. So I have a couple sell targets here on the 30-minute, and we'll get into those, but first and foremost, I wanted to show what I'm seeing here on the daily. So I think that this might be a bull trap. It breaks my heart to be bearish on semiconductors because everyone around me is so bullish, and I've had a good run upwards with semiconductors. Even as recent as last Friday, I sold out all of my semiconductor shares, and it's hard to take a bearish stance on such a strong sector and such a strong ETF in general. And so I'm having trouble saying this, I guess, but basically I think this might be a bull trap because if you look at the example chart here, this is a cutoff of a head and shoulders over here. This is the right shoulder, and actually this is the right shoulder, and what they did, or this is basically the ideal example of the bull trap for a head and shoulders. Bull traps are the most common for head and shoulder major reversal patterns, and so this would be our head, this would be our right shoulder, and this would be our low. We do our resistance based off of the lows of the head, and you can see that we have a very similar pattern that we had in SOXL, Semiconductors, where we have this wedge pattern coming in here. We had this wedge, and then price made this move up, hit our first resistance line, and then came up and hit our ultimate resistance line. And this is a bull trap, and this is a very scary thing to occur. And it's something that I would definitely take a look at SOXS, which is the 3 times bear ETF for semiconductors. If we do start to see some major topping action, I will confirm this as a bull trap. But you see the psychology of it playing out here with all of our support lines being broken, our support lines that were supporting price for about 5 months here, and we break out to the downside. And then we have this massive run upwards. Everybody gets excited. They say, this is the second coming. Semiconductors are never going to fail. And a bunch of people are starting to buy in right here. And a bunch of mom and pops are saying, hey, semiconductors are making a rebound right at this level right here. Saying we should probably buy semiconductors right now. And so people are piling on. But that's why I have a couple sell targets listed right here. I have sell target 1 and sell target 2, just like this guy did. This was sell target 1 and sell target 2. Sell target 1 for me comes at this 38.2% resistance. Comes here at a couple of reasons. First reason is it's the high of this pennant. It's the beginning of this pennant right here. It's also the high or consolidation area over here on the left side. And sell target 2 is this 78.6% retracement level, and it's also towards the top before we had our mad run up. So unfortunately, that's got to be my bearish stance on semiconductors. let's go ahead and look at the past calls that I've had in semiconductors and how accurate I was on previous trades, basis off of, you know, what is this guy talking about? What's his track record? So this was my call back on June 5th, about a month and a week ago. Basically, I said Soxel is overbought on all time frames. The bearish case is that it's coming to a long-term, medium-term, and short-term Elliott wave. It's created a new unsustainable uptrend, RSI divergence, touching the top of the new uptrend channel. RSI has only reached 82 on the weekly chart, 2 other instances with a maximum of 84. So my conclusion was short-term bearish, medium-term neutral, and long-term bullish. And made this call June 4th. And that's what happened. This is a month and a half ago. Once we did break down, this is 6 days later, I predicted that we were going to have this ABC consolidation. We were going to come to the beginning of the wedge, which was right around here. And there's consolidation at this level, as well as our 23% fib level. And that was my prediction, ABC. That's June 11th. This is June 30th, 2 weeks ago. I said that we were either going to continue to fill out the full technical target for the head and shoulders, or we were going to catch this bounce off of my original target 2. Price caught that bounce, and we have started to move up. In my most recent call on July 8th last week, I saw this descending wedge, A, B, C, D, and E. We had hit my technical target, and I saw an inverse head and shoulders here, left shoulder, head, right shoulder. We talked about this. This was my neckline right here. If we broke above this neckline, it was a bullish case, and the bullish case was marked in these blue arrows, and the bearish case was we would come all the way down to this E, and we would break out after E. And it looks like we came into our bullish case, which was the inverse head and shoulders, and so that's my track record for semiconductors. So sell targets here for Soxel include this $99 range, about 70 cents away, and 103 would be my second sell target. So that is my technical analysis for semiconductors. I hope you enjoyed this video. Sorry I have to be so bearish on this sector. I know a lot of people are bullish. Probably going to get a lot of hate mail for this, but wish you the best of luck in trading next week. And if you like this video, please like and subscribe. It really helps me out. Take care.